Okay, we are going to talk about percent complete in OpenAir. This is a fun topic. It is a somewhat mystifying topic for many of us. So my goal today is to demystify it as much as I can. So here we go. We are going to talk about what percent complete actually is, what it's used for, how it works, a few different setup options. We've seen lots of different variations and different ideas, and we'll go through that. So that by the end of that, you'll know exactly how the system calculates it in pretty much every case. Then we'll move on to billing and recognition rules so you can understand the differences in the types of rules, the setup options in those rules. And then finally, we will wrap it up with forecasting, specifically forecasting with percent complete billing and recognition. So let's start with about percent complete. What it's for. The first thing you can use percent complete for is just kind of visibility into the progress of the project. This might seem a little bit obvious. I apologize for that if so, but it can come in handy. So if you are not the one who is intimately involved in the project day to day, but you want to just sort of check on, hey, how are things going? How far along have we come in the project? This is a way to do it. It's visible within the system in two places. You have the project percent complete in your project list view, and you have your task and phase percent complete in the task list outline and Gantt chart views. What you do not have is the project percent complete inside the project. Once you're already in the project, you can only see phases and tasks. You have to go outside the project to see the project level percent complete. Wouldn't it be nice if we had a project percent complete view inside the project, but it just doesn't work that way. So sometimes you'll have to toggle back and forth or run a report from your project dashboard. Kind of an obvious one there. The other thing that we use percent complete for is calculating and forecasting revenue. I list those separately because they are different things. Calculating revenue is when you run revenue rules and generate recognition transactions. The rule works a certain way, but then forecasting doesn't necessarily work exactly the same way when forecasting with those rules. So we're going to talk about that in greater detail. Once that happens, though, you just run reports and look at the data from the forecast. The other thing we use percent complete for is we can trigger fixed fee billing rules. Once the project reaches a certain percent complete, then a billing will trigger. We'll look at that also. Okay, so how does it work? How does the system calculate percent complete? It auto-calculates for you, and it's just as simple as approved hours divided by planned hours. Very, very simple. So it's not worked hours. It waits until those hours are approved, and then it will update that task in this very simple example. And you don't have to worry about it. You just look at it. Planned hours, approved hours. Now, if you are using the feature for remaining hours, you will know this if on your timesheets there is a section to enter remaining hours, whether it's on the timesheet grid or a separate link within that. If you have it enabled, you should know. You'll also be able to report on estimated hours in that case if you do. And if you do, then percent complete is calculated as approved hours divided by estimated hours. They are mutually exclusive. So if you are using estimated hours or the remaining hours feature, you cannot calculate percent complete with approved divided by planned. It will use estimated. For those of you not using estimated, the concept is like this. So let's say there was initially a 10-hour task. Somebody works 5 hours and they realize, you know what, I've got another 10 left. They would enter their 5 hours on their timesheet, and they would say, now I've still got 10 hours left. Then the estimated would be the 5 that they've worked plus the 10 that they've said are remaining. And in that example, estimated would be 15. So it's more of a fluid number that is updated by users entering that number in their timesheet. And it can also be overridden by project managers on the task itself. I'm not going to really get into that feature in detail, but that's what it is. And if you're using it, that's how percent complete works. Okay, so the next question is, yes, but Paul, of course we all know it's not that simple. There's a lot more to it. What happens when tasks go over budget? Or if we complete a task under budget, do we have a task hanging out there at less than 100% complete? What about when I close a task? How do phases and project roll-ups work? Well, that's what we're going to dig into next. So I have this little spreadsheet prepared. Let me bump up the magnification a little bit so you can see it. So here's an example. We just have 10 planned hours. If we work 5 hours, then it's going to calculate this task at 50% complete. We would expect that, right? And if we work 10 hours and they're approved, then it's 100% complete. Well, what happens if we work 15 and we go over budget? It's still 100% complete. Okay, percent complete calculation is automatically capped at 100%. No going over. Pretty simple. Okay, what happens when we have multiple tasks? So in this example, I've got 3 tasks on a project. They're each 10 hours. So I have a project total planned of 10 hours each. Okay, what happens if I work 10 here and 5 here? What it's actually doing is it's calculating the project percent complete, not as some kind of average, but as a total of all approved hours divided by all planned hours. Sort of. I say sort of because what if we go way over budget and we work 40 on this task? Well, that doesn't actually work, does it? If we count all the approved hours, now we've gone over 100% complete. And of course, the system won't allow that. So that's technically not how it works. Let me show you what it actually does here. What it actually does is I've got 10, 5, and then if I go over and say 40 hours here, this is what it does. Even though my approved hours are 55, it's only using 25 of them to calculate percent complete. Now, why is that? Because it will only use hours up to the planned hours. So in task 1, it's using all 10. In task 2, it's using 5. But in task 3, it's only using 10 of these hours because that's where it would cap out at 100% complete. So it's using 10 here, 10 here, 5 here. That gives us a total of 25 for the calculation. 25 usable hours divided by a total of 30 gives us 83%. So effectively what we've done is we've said all these hours over on task 3 do not contribute to the project percent complete. Acts as a gate, if you will. Let's look at another scenario here where we've got tasks with different planned hours. I'm going to actually change this just for a second here. And let's say our planned hours are a little bit different where we've got something like this. Okay? Well, now, if I work 10 hours on task 1, even though that task is 100% complete, and that's 1 out of 3 tasks, the project is not 33% complete because it's weighted. Those are only 10 hours of the total 45 in the project. So that only gives it 22% of the weight of the project. Okay? Now what if I go over budget here on this task? Again, it doesn't count those 15 that I've gone over. It only gives me 5 of those hours because that's how many I have planned. And then here, you can start to see it works pretty straightforward. Now if I mark this, I've worked all 30 hours. Now the project is 100%. If I go over budget anywhere else, it's always going to cap the project percent complete at 100%. It can never use more hours than are planned. Okay? Now what happens is a lot of times you'll have a scenario like this, and you'll look at the numbers and you think, great, just when I understand how it works, it starts playing games with me, and I can't figure it out. So this is a pretty common scenario. You have a task with no planned hours, but somebody ends up working. Okay? Now here we've got 15 hours out of 20 worked. We're 75% complete, and then somebody enters the rest of the 5 hours. Oops, I'm going to put 5 here. And it doesn't do anything to the project percent complete. It just stays right there. Why is that? Because it can't use these planned hours. 0, there is nothing to use. So if you don't plan hours and somebody works on it, that task is weighted at 0% of the project percent complete. If I want to make this project, well, I've worked my 20 hours. I just didn't put them on the right tasks that I expected. You would just need to, in this example, add another 5 hours here. But realistically, you don't want to do that, right? Because, well, that task was done early. I've only worked 5 of those hours, and the other 5 I worked somewhere else here. So I can't artificially have approved hours. How do I make that 100% complete? I'm actually going to get to that in the next couple examples. But first, let's take a look at how this works when we have phases. So now it starts to get complicated. This is probably what a lot of your projects look like already, where you have multiple phases, multiple tasks within them. All your tasks have different planned hours. Some of them have no planned hours. Okay, let's take a look and see what this does. So here I came in at budget. And here, this is the example we just looked at. Right? This phase is only 75% complete because I've only worked 15 of the 20 planned hours that I can use for percent complete calculation. Okay, so let's move on. What about the next phase? In this phase, I'm going to do something similar, but I'm going to go way over budget on this task. Okay. Now again, even though I've worked 65 hours on phase 2, doesn't matter. It only gets credit for 30 of them. You can see that at that phase roll-up level. That phase is 100% complete. Now what we have is this weighted thing happening where phase 1 is at 75% complete, but it's only worth 20 of the project's hours. Phase 2 is at 100% complete, and it's worth 30 of the project's hours. And what that gives us is a project total of 45 usable hours out of a total of 50 planned. And that's how it calculates the project percent complete with multiple phases. Let's look at that previous example where you finish a task early. Okay, now there's a couple ways to do this. One is you can change your planned hours, right? So if I came in early on this task and I only needed to work 5 out of the planned 10, one way is you could change those planned hours to 5, and that would do it. But suppose you don't want to change your plan. Suppose you want to say, I need to run a report that says, how did we do against our plan? You don't want to start modifying your plan because it ruins your ability to report against how you did against it. So let's assume we want to leave that plan alone, but we want to mark it 100% complete. We have a couple options. One is you can just manually override. We're just going to make this 100%. You can do that. So there's a feature that allows you, or a setting, so that you can manually override percent complete. I don't actually happen to recommend that, using that feature, and we're going to talk about the details of why and where it is actually useful. So instead of doing that, let me undo that change. I'm going to use the option to mark closed tasks 100% complete. So if I do this, I'm going to say yes. Now it gives me credit for all 10 of those hours, even though only 5 were approved. So as far as the project percent complete calculation is concerned, it's using all 10 of these hours because the task is closed, and we use this option to mark closed tasks 100% complete. Much easier if you're a project manager to just go through all of your completed tasks, check the box, mark them closed, prevent future time entry, and also mark them 100% complete in the meantime, and then you've got an accurate project percent complete. Okay? Same thing here. Doesn't have to be a closed task for that to work, but if I came in under budget, yet again, and I want to just close that task, I can do it, and now I've got credit. So what we see is I've only worked 25, is that right? Yeah, 25 hours out of the project, but it's giving us credit for 30. All right. Let's go back to our presentation. All right, so I just mentioned overriding the system calculation. It does allow you to do that. It's an option. You can set the increments in projects. And this is application settings, project settings, other settings. You can set increments of 5% complete, 10%, 25%, or even 1% if you want in that drop-down. But I generally will make that percent complete drop-down read-only. It's too much of a temptation. And if you start overriding those calculations, the problem is when you're running reports, you're never really sure, let's see, is that manually overridden or is that a system calculation? And then you pull out your calculator and you say, no, okay, that's the calculation, I'm okay. Don't even go there. If you start distrusting those values, it's not worth it. Although there is a scenario where I think this can be potentially useful. So this I've seen a few times here and there where it makes sense. You can use both calculation and the override. And where I find this really useful is when you have portions of your project that you've outsourced. So percent complete cannot be updated based on hours being entered. So if you've given this to a freelancer, if you will, or somebody who's not going to be entering time, but you want to track their progress manually, you can do that. So on the left little snippet there, you can see this main project has planned hours and approved hours, so it's getting its own percent complete calculation from the system. But then we've got this phase that I've called freelancer deliverables with an HTML task, and it has 0 planned hours. Then I can go into that task, which you see on the right, and the drop-down is available because I've created a permission rule that says if I check this box, outsourced task, just as an example, then allow me to modify the percent complete. Otherwise, it's read-only. Now, why would I do this? You would do this if you want to have separate percent complete recognition rules. So I've actually seen this here and there. If you want to recognize your outsourced work based on something that the system cannot auto-calculate because no time is being entered, but you still want to contribute toward revenue, as that work is progressing, you can manually populate that, have a separate rule tied to it, and then have a separate rule tied to your other main phases, and those are going to be auto-updated as approved hours come in. So that's one scenario where you might want to use both. Now here are some things I'm going to warn you against and ask you to please do not be tempted. These are ideas that we have all heard here at TopStep over the years of people thinking they want to do things a little bit differently, and I'm going to try to persuade you against that. The first one is, well, I don't want the system to calculate it. I want to just do it on my own. I have good project managers, and I'm just going to drop down as I see fit. Please do not do this. It is too much work for any human to maintain accurate percent complete. It's part of the reason that you bought OpenAir in the first place, so that you can have the system do that work for you. What about, okay, let's say I'll let the system calculate it, but let me add a separate field that the project manager can update where he's going to kind of give his 2 cents and say, well, yeah, I know the system is calculating 50% complete, but actually it's more like 80. Project manager knows better. If you want to do both, the problem is really you'd never really know which one to trust. And that information on the custom field doesn't become all that useful. It might be something that you want to look at, but really what that should be driving is a question of, wait a minute, if you're saying it's 80% complete and the system is saying it's 50, why are they different? Are the planned hours different? Do we need to update the planned hours? Are we going to go over budget or under budget? What is the real cause of that? And deal with that separately. And then I've seen lots of creative ideas for custom calculations for reports. If you want to use worked instead of approved hours, you don't want to wait for timesheets approved to affect percent complete. It is possible to do that. You can also do approved divided by booked hours with actuals if you want to get creative. The problem with custom calculations is that they do not cap at 100% complete, the way that we just saw in those examples. So yes, technically, the system can do those calculations, but they're going to be wrong when they're over 100% complete, and there's no real way to stop that. So don't be tempted. Okay, billing and recognition rules. We're going to look at the types of rules that are available, what they do, and how they work. The first one is really easy. It's so simple, I think it warrants this nice workflow diagram here. A fixed fee billing rule on percent complete. Here's what it does. You run billing. It looks at the rule and says, the rule defines how much to bill and at what percent complete threshold. Is it 100% complete or 50 or whatever you set it to? If yes, then generate a fixed charge. That's all it does. Painfully simple. What it does not do is percent complete billing. It will not run billing, determine what is the percent complete, and generate a charge based on that percent complete value. So if that's the way you run your business and you were hoping that OpenAir would do that, I'm sorry to tell you it just doesn't work that way. There are a couple options that you have if that's the way that you need to run billing for whatever reason. Number one is incremental billing. This is the one that I recommend most frequently. So rather than saying we're going to bill you at 47.5% complete and bill you that amount, we would just set gates. Every time you reach the next 10% complete, we'll bill you the next 10% of the project. So in this example, you have 10% increments. You would have 10 billing rules billing 10% of the project at each increment. Okay? The other thing that you can do is even less automated, which is calculate your percent complete with a revenue rule, which we're about to look at. Get that value, and then just create a manual charge based on that amount. My revenue says I'm this percent complete, that's worth this much money, and then just create a manual fixed amount charge for that amount, and then put it on an invoice and send it out. It's very manual, but at least you can calculate the right value that way. Okay, recognition rules. If you've ever created a new recognition rule, you are familiar with this screen. You have lots of options. It's easy to sort of blur your eyes and ignore that there are so many rules and just go right to the one that you care about and pretend that the others don't exist. So if you're not using these, hopefully I will demystify some of them for you. Let's start with the percent complete recognition rule. Once you create that rule, you have even more options. And those are these little radio button selections you can see on the screenshot here. Calculate percent complete for the project, for the phase or task. You can do approve versus planned, approve versus budget. So many of them. Let's walk through what they are. Starting with the percent complete for phase and task, or approve versus plan for phase and task. It allows you to say, forget about everything else, just for this phase and task that I select on the rule, recognize revenue based on percent complete for that. Okay? Might work great. You might have a good reason to do that. Just be careful. If you're using bookings and you're not booking to the task level, it will break your forecast. The system has no way of knowing what's going to happen in the future on those tasks if you haven't given that information to the system in the form of bookings. That's assuming you're using bookings. Now, if you're using planned hours to do your scheduling with the dates and keeping that up to date, and that's how you want to do your forecast, no problem. This group here, the approved versus planned or approved versus budget, ignores that whole demo of how project percent complete is calculated. And it just does what I call a straight line. I know there's a thing called straight line projections in the system. What I mean is every hour worked counts toward recognition. There's no capping at 100% complete of a task. It's just if you've got an approved hour, it's going to count. So here's a scenario on the right. In this little example, you've got 300 planned hours. And in January, February, March, you work 100 hours each. If you're using one of these rules, you've recognized all your revenue because you had 300 planned or budgeted. You worked 300 through 3 months. You are done. You've recognized all your revenue. There is none left to be recognized. But what happens in April if you have gone over budget on the project? Now you have cost without revenue, which is kind of a no-no. So you don't really want that to happen in many cases. Or at least you want to know that's the result of it if you're using these rules. So the alternative for that would be this percent complete for the project or for a phase and a task. And this is a different way to present it, but think of it as the same scenario. Okay, you've got 300 hours. If you're looking at this little chart that I've got here, 300 total planned hours. I've worked my 300 in January, February, and March. However, in this scenario, because I went over budget on task 1 and 2, it capped the recognition on those. So I've only recognized 200 hours for those first 2 tasks and 25 hours for task 3. So I've only recognized 75% of my revenue through 3 months. So what does that mean? It means even though I've gone over budget, because I've broken up my project into tasks, those task planned hours act as a gate to protect me from over-recognizing revenue too early in the project, which is really nice because now I can work in April and I've still got 75 hours I can work and recognize that revenue in April. So I'm not stuck with that cost without revenue that we saw in the first example. Now keep in mind, one final note on this. This doesn't do you any good if you only have one task on your project, right? Because you're going to go over budget on that one task. You'll have recognized all of the revenue once it reaches 100% complete. So this really becomes useful when you have multiple tasks on your projects. Okay, here is a rule that I would nominate for most ignored. This is one of those rules that, again, blurs your eyes a little bit when you look at it and you say, that looks a little weird. I don't think I need it. Move on. So I am here to explain what this rule does, what it's for, and maybe a couple of you would find it useful. So here's what it does. It does calculate based on percent complete, but it arrives at that percent complete calculation a little differently. It uses cost. Okay, so it's incurred divided by forecast. Incurred is the total actual cost from any combination of what you select, and that can be approved timesheets, approved expenses, and fulfilled purchase items. And then the forecast, again, is the cost total of whatever you select. It can be, if you're using planned hours, you would check that estimated hours. Even if you're not using the estimated hours feature, that's what you check, and it'll use planned. The second option would be approved and booked hours. If you're using bookings, that's what you would check. And then optionally, expenses and purchases. So if you need to do recognition based on a cost incurred basis, this is the rule for you. If you don't, and that seems really foreign, you're a services business, that's not how we do things, I understand, but there's still potentially a case to use it. So this is what I just described. This is what the rule looks like if you haven't taken a look at it. You can check only the things that apply to you. So in this example on the right, we're only going to use hours with bookings, but we're also going to say, I expect to use a total of $2,000 in purchase items, which I'm going to say is contractor cost. And that can contribute toward. You can do just hours as well, any combination of these. And then you can filter out non-billable time from incurred. Okay, so if you're using time type or you've got a task that you want to separate so that it doesn't contribute toward percent complete in this case, you can do that. If you've got somebody shadowing who should be non-billable, you can filter out a particular user. Lots of flexibility. Why would you use this? To me, the real case for using this is when recognition should reflect the percent of the updated plan. The updated is underlined for a reason because the updated plan is probably different than when you first created the project and added all your planned hours, right? Once you start working on a project, everything changes. So the question is, what is your updated plan? Where is that actually reflected? Is it reflected in your planned hours? Are you maintaining those? Are you updating those? Or estimated hours? Or are you updating them in your bookings? The second bullet point here, if you are maintaining a complete and accurate schedule of your project, whether that's bookings, booked hours, or planned hours with accurate dates, then this is a candidate for you. And then the third reason you might want to use this is I've actually bumped into this a few times. If you're already doing something just like this or very similar to it in a spreadsheet because you think OpenAir can't handle it, now you know. Here's a simple version. If you just want to use hours, okay, just use a $1 an hour cost for all users. If you're already using cost, maybe use it for your second or third level cost. You can do that. You can define, so only use cost level 2 on this particular rule. So everybody's at 1. So an hour worked, or approved I should say, is 1. Use the option only to use approved hours versus forecast hours. If we back up, what I mean is only use the hours options under this incurred versus forecast screen here. And what that does is it becomes percent complete of approved plus future booked hours, which is your forecast in this example. It's not a revenue forecast necessarily exactly like we're about to look at, but it does say, here's our updated plan. It's different from our original plan. What's our percent complete of that? Just based on hours. Okay, forecasting, everybody's favorite topic. We're going to talk about how that works and some setup recommendations. All right, billing forecasting first. Billing is really simple. Let's get it out of the way. We just have 1% complete billing rule. How do we forecast that? Maybe not how you think. Remember, we haven't defined a date in this rule. It just says when the task is 100% complete or when the project is. So what does it do? It looks at the latest task end date. If you're doing it on task, or if you're doing percent complete for the project, it looks at the last date in the project on any task, and it says that's when you're going to be 100% complete. I'll forecast it all on that date. Okay? If you have set a 50% threshold, it will put all of the forecast monetary value halfway between the project start date and the last end date on the project. Okay? And so on and so forth. 75% would be 75% between those dates. Using business days, you get the idea, or weekdays. Now, something weird that is very important. If you are not accustomed to populating dates on tasks because you do everything with bookings and you don't care about task dates, keep in mind that that will break this forecast. If you don't actually open up a task and put a start date or an end date in there, this will not work. Don't know why. That's just what happens. So you have to put one start date or end date somewhere, and then the rest of it works fine. It'll still use the project start date and the last calculated finish date for the project. It's just that you have to populate it at least once for that to work. Okay, now to the fun part, revenue forecasting with percent complete rules specifically. This is not a forecasting webinar completely. We're really narrowing our focus to just percent complete revenue rules. So we have 3 things that we care about, 3 things that matter. Our charge projections date range, our charge projection settings in terms of which hours we use, and whether or not we're going to factor in used amounts, which I'll talk about in just a second. So the first of those variables is your charge projections date range. Okay. If you've ever looked at your charge projection screen, you know that you can set a date range between which the system will generate revenue and charge projections. Okay? So we've set it up to start on April 1st through the end of 2013. What that means is there is no data to report on before that date or after that date. So if you're running a report for January through December of this year, there will be no forecasted data in January, February, and March because you've set the date range accordingly. Now, you might be tempted, well, I'll just set it from 2010 through 2020. That way I always have projections. There's a good reason you don't want to do that, which we're going to see in just a minute. The second variable is your charge projection settings of where are the hours, which hours are you using. Now, even though there are lots of radio button selections here, there's really only 2 options that matter. If the word booked is in one of these, then it's going to use booked hours in projections. If the word booked is not in the selection, it will use assigned hours. It doesn't care about what percent complete the project or task currently is for projections. It completely ignores that. The other thing that it ignores is time entered to date. I want to let that sink in a little bit. All it cares about is, do I use booked hours or do I use assigned hours? And that's it. Let me back up and make one more point about this. These settings do matter for other types of projections. So for billing projections, for other types of rules, for as-billed revenue recognition rules, it does matter. There is a difference between selecting booked hours or approved and booked hours. But for percent complete specifically, it doesn't. And the third variable is whether or not we have these switches enabled. So the switch is factoring used amount in percent complete revenue recognition projections, or incurred versus forecast. What does that mean? When it's figuring out how much revenue do I need to forecast, am I going to forecast the entire rule amount, or am I going to forecast the leftover amount on the rule, the part that we have not yet recognized? So without the switch on the left, you can see the project budget is $1,000, pretty small project. It's going to forecast or project the entire 1,000 if you don't have that switch enabled, even though you've already recognized 800 of it. If you enable this switch, you will only be able to forecast a total of whatever is remaining on that rule, which is $200 in this example. So to recap this, the rule really asks, or the system asks itself 3 questions. I'm personifying the system right now. It first asks, how much do I need to forecast? In order to tell that, it looks at that internal switch we just looked at. Am I going to forecast the full amount or the remaining amount? Okay, great. I've got my number. I know how much to forecast. Next question is, across what date range do I need to forecast this? I'm going to spread out this amount from question 1 between which dates? And that's controlled by your charge projection date range. And then third question it asks is, how do I distribute it across that date range? I'm not going to do it evenly, obviously, otherwise our hours wouldn't matter. So it looks at our charge projection settings, first of all. Is it going to use booked hours or planned hours? And then based on that, it's going to look at the actual booked hours or assigned hours or planned hours you've got. And it's going to scatter them accordingly. Let me show you what that looks like. Okay. Here's an example where we're saying that our date range is at the top. We're going to forecast just like we looked at earlier from April 1st through the end of the year. And that's highlighted in yellow there on our little monthly calendar. Our project, this example is going to use booked hours, and we'll do a separate example for planned hours. Our project actually had booked hours in January. That's when we started. But now we're in April. We're starting to forecast in April. The question is, what happens to these booked hours in the past if I'm only forecasting starting in April? Do they matter? The answer is no. So let's look what happens. Right now, what it's doing is, under this projected revenue allocations, those percentages they're taking the percentage of each month's booked hours as a total of the booked hours in the projection date range. So from April to December, how many hours as a percentage are these 100? Well, they work out to 15%. Let me show you something easier to see. Okay? If we've only booked these 4 months evenly, you can see that each month is 25%, not of all the booked hours, but of the booked hours in the projection date range. So it doesn't actually matter how many were booked in the past. It doesn't care. It ignores them. I can do 500 here. doesn't affect what we're projecting. Because in terms of revenue, it ignores everything before that date range. Okay? So what happens if I bump this one way up? Next time projections are run, it says, June has 500 hours. That's 63% of all the booked hours in the forecast date range. Therefore, I'm going to forecast 63% of the revenue in June. And notice, in this example, the total projections are $10,000. Why are they $10,000? Because we don't have that switch enabled to project just the remaining amount. Okay? If we had that set up, then it would project whatever is left over, but based on the same allocations. Okay? What happens if we keep booking here? Okay, there's our numbers. Let me do everything nice and even so we can see it more clearly. Now we've got 11% per month. What happens if we still book past the forecast range? I think you already know the answer to that. Nothing. Doesn't matter before, doesn't matter after. Just looks at that range, and that's how it scatters, if you will, or distributes the revenue projections for percent complete. Again, just to reiterate, it doesn't care what your current project percent complete is. It doesn't care how many approved hours are already worked. Even if you're projecting with booked and approved, for the purposes of percent complete, it ignores that entirely. Okay, this is how it works if you're using bookings. If you're not using bookings and you're using assigned hours, it does not work the same way. I don't know why. I just know that's how it is. So let me show you a more simple example here. In this case, what it's actually doing is it uses the percentage in the revenue allocations here in green. It's the percentage of the total planned hours, not just the planned hours, or I should say assigned hours, in the projection date range. Even though it uses the dates of the assigned hours to distribute the revenue in those months, because you have hours in those months, the denominator, if you will, is across all planned hours. This is where things can start getting really weird, because let's say your project looks like this. You set up the project in January. You didn't pay much attention to the dates at that time because they weren't important for whatever reason. And then the hours trailed off, the assigned hours, I should say. Now you're in April. You're starting to run your forecast, and you're saying, wait a minute. This is a $10,000 project. Why am I only forecasting $909? That's wrong. OpenAir is broken. It's not broken. That's just how it works. You're not looking at the hours before April, even though they're there. Very, very different than how bookings projections works. All right. Last topic, we'll wrap it up here. A couple of parting thoughts in my recommendations on how you ought to try to negotiate this trade-off between having actuals and forecasts. So now I'm going to state a goal for you, and that is that you should strive to have actuals in the past, forecast in the future, exactly, without double counting. Here's an example of where you can get in trouble by double counting. You're forecasting where there are actuals. Why? Because you've generated actual revenue through March, but your forecast date is still set to start in March. So now for the month of March, you've got actuals and forecast. I put that in brown there to say bad. It's not actually necessarily bad. It's just probably not what you want. Not because you're necessarily going to say your forecast includes actuals. You might have your report set up in such a way that you're only looking at the forecast and not looking at actuals or reporting them separately. But what's going to happen is your March numbers are going to be different, and it's going to cause confusion, because you're going to send somebody a report that's going to say, hey, we're forecasting this much for March, and somebody else is going to say, oh, that's not what we made in March. Your report is wrong. So it just causes unnecessary confusion. You also want to try to avoid these what I call dead zones. If you're using the the option on your charge projections to project just starting today forward. That's an option. You don't have to pick actual dates. This is what it would look like. You've closed your month of March. You've recognized actual revenue through March, so you have actuals through there. But if you are just starting your forecast this week, let's say, April 9th in this example, then there's this dead zone for the first 2 weeks of April where you haven't generated actual revenue through April, and you also don't have a forecast for those first 2 weeks in April, so you have a dead zone. It might not be obvious in your report, especially if it's a monthly report. You say, oh, I have actuals in March and I have a forecast in April. What you might not realize is that your forecast in April is incomplete. And in order to try to achieve those goals, this is what you ought to do every time you generate actual recognition. You want to make sure that you have all timesheets approved. Why? Because approved timesheets, even though you're not billing, they affect percent complete, right? Remember we said all hours don't affect it. Percent complete's only changed when the time is approved. So you want to make sure all that time is approved. You also want to be careful to not approve time for the next period. So if it's month end, somebody's entered a time sheet maybe in advance, maybe by mistake, who knows. Be careful not to approve that because that will update the percent complete for a time period it really shouldn't. And you want to go ahead and generate your recognition. And I say for all projects because you want to make sure that your reports are complete. If you're looking at actuals, you want to make sure that's all actuals and not just some actuals. And then once you do that, you want to move the start date in the charge projection settings to the next day after you have actuals. Now, for a lot of you, this is a monthly process. In some cases, I've seen it as frequently as weekly. That's why I didn't include the option to change your current accounting period. This is not what I would call a month-end checklist necessarily. This is really just managing that negotiation between trying to keep a very solid line between actuals in the past, forecast in the future. Okay, now that I've told you this great idea, keep in mind this is a goal and this is a general recommendation. I have seen lots of legitimate reasons why this either isn't right for you or doesn't work for whatever reason. So being that this is a webinar, I'm trying to give as general advice as I can, but if you've got other things going on, of course, that happens. And this is my favorite transition. If you don't have PowerPoint 2010 and you're not using that, you're not getting your money's worth. So one quick reminder before I open it up for questions. SuiteWorld is coming up next month. It's May 13th through 16th. If you haven't signed up, give us a call and we can talk to you about it. If you're not sure, you should. Here's what I'm going to say. We are making this into the largest user group for OpenAir users to date. We have these little buttons that say I run OpenAir. So as soon as you get to SuiteWorld, come to our booth, grab your I run OpenAir button. We're right at the beginning when you walk in. You can't miss us. That way as you walk around, you'll know who all the OpenAir users are and get together and share ideas and tips and so forth. Don't forget to check out our website for upcoming events. We do these webinars every month. So there's also a lot of great free content out there as well.